Welcome back. You're watching us here on Bazaar Morning Call, the penultimate trading session of 2025, and the GIFT Nifty indicates it will be a 38 point downtick at the open. Not too hot, not too cold. That's the range as far as December so far has been concerned. Let's get into individual stocks. Parag Thakkar, who's a senior fund manager at Fort Capital, joins us now. Parag, overnight we saw a big drop in commodities. You think that maybe the rally that we saw in commodities on the back of these underlying commodities rising may come undone, or this is just a small blip profit booking before we restart a rally?
Good morning, everyone, and Happy New Year to you and your viewers also. So I would like to say, see, I had Hindalco in our portfolios since long, but we have booked out profits, and now we don't own any commodity stock in the portfolio. And I would like to say that after such a big rise, like 156% increase in silver, and I would not be a buyer in these stocks. I would not like to comment on whether the rally will continue or not. The only thing is that if Russia-Ukraine settles down a bit, then I would say that there will be some correction in at least in precious metals. Of course, the quantitative easing again starting is supportive for this precious metals and all other metals. Plus, there is a physical shortage of, say, for example, aluminium structurally, or might be copper and silver also. But I would say that after such a big euphoria, I am not a buyer. In fact, I would strongly urge government to look at selling some stake in Hindustan Zinc. They hold 29% stake, which is worth around 78,000 crores. So they should do a OFS, gradually sell some stake in Hindustan Zinc when the price is so good.
Hindustan Zinc, yeah. The other one, Parag, hi, morning. Good to see you. Hindustan, the copper is the other one, right? Precious metals is one, but in base metals, copper has had a clean breakout to all-time high. Again, for many, that is the favorite kind of play on everything, a bunch of things, which is, grid upgradation, etc., everything. Look at Hindustan Copper here, right? 50% in December. 50%, that's a huge one. I think was at 320 at the end of last month, almost 490 as of yesterday's close. Any thoughts here?
So I would not be a buyer. As I said, Prashant, I would not be a buyer into this momentum. I am a contra buyer. I am buying FMCG, cement, Coforge, Reliance kind of things right now. I am not a buyer in this name because I don't want to buy after 50-60% move in a month.
Yeah, no, that's it's important to resist the temptation and not get sucked in also, because that is what
typically... There are too many FOMOs which you have to stay away from, right?
Temptations.
Like loss-making companies getting market cap of 1 lakh crore and more immediately on the listing day. Yeah. That is a kind of FOMO which you have to stay away from. At some point, this will fizzle out.
I think this is life advice Parag is giving, not just stock advice today. Yeah. Stay away from FOMO, stay away from temptation. So speaking of that, Parag, what I found really interesting was your FMCG call. I don't think I've ever heard anyone in this year say that they really want to now start building positions in FMCG. So let's start right there.
So to be saying that with Mangalam by your side?
I know. But it's been the hard truth, right, for many, many quarters in the market. And for good reason, because the market wants to reward and buy growth. And growth has been anemic, 2, 3, 4%. And no one likes to hear single digits in India. In India, you come and you buy growth. So what's your thesis here? What's changing?
Based on my channel check, after the November month, which Hindustan Lever has also said, things have picked up on the ground in FMCG. You will see results. I think my channel check suggests that Godrej Consumer, Emami, Marico, this kind of companies will report good numbers. And I think Q4...
What is good, Parag? Define good when you say good? In terms of volume growth, top line growth?
See, high single-digit volume growth will be a good number, and EBITDA growth of about 12-13% will be a good number in my view. Some of these companies have very low base also. For example, Godrej Consumer, Dabur kind of companies. Some of these companies have advantage of season also, like Emami has a winter advantage. Yeah. I would say that this is a sector, and cement also. For example, I'm hearing that in the month of December, cement demand has revived in East, and so companies might attempt to take a price hike from first. And January, February, March quarter is generally strong for cement in terms of demand. So I would like to say that cement and FMCG are good contra-buys at this point. apart from IT companies like Coforge, where again there are many discussions going around the valuation of the acquisition.
Interesting calls, Parag. We'll ask you to hold on to those thoughts. Cement, FMCG, and a couple of these mid-cap IT names. And I take your point entirely on companies like Dabur and Imami, which also stand to benefit from a low base and a longer winter season. And valuations as well for both of them, not as demanding as they are for other FMCG companies. What we'll do
In a way, kind of sort of, one of those things which we were talking about FOMO and buying into, into a frenzy. I mean, that usually leads to a very subpar result, and this is a case in point, maybe price-wise.
Absolutely. Yeah. So, for example, to pay 75 times just because the company is showing 2-3 quarters of 40-50% growth, I think it just defies my logic. To pay 75 times means you should expect at least 50% growth for lifetime, not 2-3 quarters. So the longevity of growth also matters, right? It's just not 2-3 quarters for which you are paying 75 times the company's earnings.
Yeah.
Today it is 55 times after the correction.
Yeah.
So I would say that, sometimes people just get carried away, and this is what happens then. And I would say that in quick commerce also, for example, see, anything which does well attracts a lot of attention, lot of, I would say, market. So, for example, quick commerce, we are giving such a big market cap for loss-making businesses. Now everybody is ready with money. So everybody further compete and fight in the marketplace.
Yeah.
Why are investors funding them just to create war chest to fight against each other in the marketplace? That I don't understand. And now, though, I think their employees are also not happy. And now we have seen the CFO exit also. So I think all these things this just defies my logic. Even if, for example, if I am a fund manager, I am saying that I should look at my own portfolio and say that some of the stocks which are available at 52-week lows after this mid-cap and small-cap correction, and if there is any traction in those stocks, I should buy them rather than giving the money this company just because it is in fashion.
Yeah. It's a point well taken, Parag. So it's a
they might have a long-term runway of growth, but currently the problem is that sorry. Yeah.
No. I completely take that point. But the basic point we were making, right? Don't look at what is doing well and what has been doing well because money at the end of the day in markets is made by living in the future, not living in the past in that sense, right? I mean, so looking at sharp returns and expecting that to continue, perhaps not the best way to go. Parag, just two things. FMCG, very briefly, Sanjeev Prasad made this point. His point was very simple. Even if these companies, pure FMCG companies, if they were to grow at, say, 7-8% for the next decade, because they're trading at 50 times earnings, it's possible you don't end up making money because there will be some P multiple derating. That is one. Briefly, if you can respond to that. Second is Coforge. I wanted your view on because that has come off a little bit after the deal announcement. There was a call yesterday. Any thoughts? And I think you briefly mentioned it. Go on.
So first of all, a point on FMCG, right? First of all, FMCG, although may grow at say 10%, the growth has bottomed out, margins has bottomed out, at least for companies like Godrej Consumer and where I have done my channel checks, and some seasonal spikes, as I said on Dabur Imami kind of things. The other point which I would like to say is that, if you remember, Prashant, and give me one more minute to explain this. A few years ago, there were many notes in the market which were floating saying that two-wheeler industry is dead because the industry is fully matured. So how much growth rate you assume for your DCF to give them 25 PE?
Correct.
Look at what TVS Motors has done. TVS Motors, I remember when I was in ICICI Pru, was trading at 530 rupees. And this is not long ago. It is, I think 2021 or 22. 530. This has become 3,500, 7x, right? And in this so-called dying industry, this company has grown its EBITDA at 25% CAGR. Right? So basically, you have
But Parag, TVS, right? And I'll take you back even a little bit more further into history. 2014-15, I think it was till that point, it was Hero was the clear sort of leader, and then and TVS actually started to pick up. But TVS's gains have largely come at the expense of other players like Hero, largely Hero, right? So it's market share gains. Industry is not grown. Industry has grown at very low single digits. Yes.
If you take a very broad helicopter view and say that this industry is not going to do well for many, many years, you have to deep dive into those companies. I would say companies' efficiencies, right? Like TVS, what they did, they launched every product at a right price. They gave excellent quality experience to the customers. So word of mouth attracted a lot of customers. They gained market share. They developed exports. They did well. They improved margins by cutting costs. So you have to go bottom up. No?
Yeah.
Then you have to buy, which is ignored, right? TVS Motors at that time was ignored stock because it was optically expensive, but it was doing great things, which actually yielded results afterwards.
Yeah.
I would say that, so just to say that, just to say.
No. Blanket statements, absolutely, or with absolute generalizations are, sometimes people make them to, it's like an exaggeration to make a point. But
And I completely respect Sanjeev Prasad. He is far more knowledgeable than me. I'm not arguing.
No. It's a market is a world of ideas, right? And opinions, and that's what makes the market. That's what makes it more interesting. But take your point, Parag. Really appreciate it.
And coming on Coforge. So, for example, just to put this in perspective, if you are wearing an IT analyst hat, you will say that Coforge has paid, 20 times EBITDA. So what it was trading at, it has paid. So there is no EPS accretion for 1 year at least. So if you are wearing an IT analyst hat, it is okay. But if you are wearing a fund manager hat, just imagine they have actually complemented their strengths, right? By bridging the white space, bridging the gap. Right now, the 80% of the merged entities portfolio will become AI, data, and cloud, which is futuristic, right? They are getting 11 more $10 million plus customers. They are entering into high-tech vertical, which was not there with them. We straight away with the entry point of $170 million revenue, right? So they have to bite the bullet to be future ready. Plus the incoming investors, Advent and Warburg Pincus, they are joining with Mr. Sudhir Singh in this journey, right? And their entry point is 1815.
Yeah.
Right. So they are also actually aligning with Mr. Sudhir Singh's strategy. And so this guy has shown again a double-digit growth and industry-leading growth.
Yeah.
And the merged entity is going to make 14% EBIT margin. My batch says that EPS of 52 in FY27 on a merged entity pro forma basis, and about 60 rupees in FY28. So it is not that expensive stock, 26 times FY28 for a mid-teen EPS growth.
Yeah.
And about 20% ROE, ROC. So, when we are paying 1 lakh crore for losses, 20,000 crore for 1,100 crore EBITDA, I don't think, if it is a complementary and a much futuristic acquisition, I don't see any problem in that.
Got that. And I think good, forceful remarks. That's what's needed. Strong opinions backed by numbers. That's the reason why I asked you about Coforge. It's come off the highs and maybe there's a bit of an opportunity. We'll see. Parag, thank you very much. And if you don't see you before the close out of the year, and wishing you, your team, your family, very happy New Year. Thank you.
Thanks.
Thank you. We'll take a